believe it or not, we're more than halfway through 2023. And despite the rising temperatures and everything that's going on, now might be a good time for you to do that half-year financial checkup. That could make the difference between financial well-being or having unhealthy financial situations. Now, to guide the conversation with me today is Deanne Davis. She is Senior Financial Services Specialist here at the VM Group. Now, Deanne, tell us a little bit about yourself and what qualifies you to give us some info. What makes you the expert?
I've been here for over a decade where I started at Property Service where I work in the accounts department. Then I transferred to being a teller, and then from a teller to a junior financial service specialist. Then I was upgraded within a year to senior financial service specialist. Now, because of my role that I was in and I excelled so much, I was on the management training program where I went to act as several capacity. For example, as branch manager at the UTEP branch, the New Kingston branch, and also I had worked in the treasury department.
Thank you so much, Diane, and I'm looking forward to what this discussion will unfold. To our audience online, I'd like to remind you that our team is on hand to answer any questions that you may have. So you can send us a private DM or you can telephone 754-VMBS, that is 754-8627, or you can also send us an email, and that email address is manager@myvmgroup, manager@myvmgroup. Now let's get into the conversation. Diane, tell us, why is a mid-year financial checkup necessary?
A mid-year financial checkup is necessary because you need to know where you are now, what you need to do, and how are you going to go about in getting it done.
All right. So of course, there are a lot of changes that might come along. During the year, you may have your goals at the start of the year and you need to evaluate them. So what is the first step that you do when you're starting to do that mid-year financial checkup?
All right. The first thing that you need to start to do is doing a budget. Have a budget plan. What are the things that are necessary and what are not necessary? So it's like your needs and your wants. So you put aside what is necessary, which is your needs, and your wants. Put aside a budget for that. And it's just like planning for a rainy day.
How do you plug those leaks in your budget, or how important is doing that?
So what you can do is to review your budget to know what are the essential stuff. So for example, you would have like subscriptions, credit card bills, and shopping. So you take out the things that are essential. And for example, with your subscription, you would minimize on some of your subscription that you may have. And shopping, instead of saying that you're spending $50,000 on shopping, you cut that in half and say, all right, I'm going to spend $25,000 on the shopping. For like credit card bills, ensure that you pay for example, if you get like $200,000 for your salary, try not to do half of it. For example, 100,000. Do a minimum of 50,000 on your credit card bill because you want to make sure that you do not go over what you make on your salary because you know that you have additional expenses. So always also try and pay your credit card bill.
Mm-hmm. And it's also important to ensure that you stay consistent with those payments, not just the credit card, but whatever payments that you have, maybe a car loan, your mortgage, other small loans that you may have. Now, it's a good time to look at your credit card balance. Are you making your payments like you were back in January? Suppose you figure out that you're not. How do you come back to that point?
So Samantha, as I mentioned before, paying your credit card bill in full is essential because once you don't pay it in full, there's additional charges. So for example, if you pay the minimum balance, there's still a charge because you haven't paid it in full, there's still a charge. And that charge that you would, for example, you keep on paying the minimum balance every month, that charge is going to accumulate. And by the time you know, that bill that you could have paid off would have accumulate. The charges that it comes up to would have accumulate to the full credit card balance amount.
Yeah, so I guess it's important to check those spending habits that you have that are not necessarily measuring up. So that's what you're saying right there.
Correct.
Exactly. So it's a good thing to do when you're doing that mid-year checkup and any checkup for argument's sake. Now, when it comes to savings and doing that mid-year checkup, what are some of your recommendations?
Once you have your budget handled, it's always to prepare yourself for that emergency situation. And the recommended, it's for you to save at least 3 to 6 months worth of salary.
So tell us about some of the other savings tips.
All right, some of the other savings tips that you can have is to have several accounts where you can have, say for example, you have a spending account where you would link that debit card to. So for example, you get your salary in this account, and then in order to manage yourself, so for example, you said, all right, I want to spend a maximum of $50,000 for this month. So you would just transfer $50,000 to the card account, and then you will know that you will use from that account. And once that is finished, you know that that's it for that month, in order to, to keep yourself in check.
Mm-hmm. It's very important to have that, and I have done that with myself, and I've seen that it's worthwhile, it's beneficial when you have different accounts that you put money in so that you can manage what you spend and what you save.
And also, you can also, if it is that you have more money left back in that pool account that you would have gotten your salary in, you can always open a fixed deposit account in order to plan for a 1 year, like some medium goal or long-term goal. So it depends. So you just fix that amount based on your the type of goal that you'd want to achieve.
Of course, yes, and of course, we would invite the audience to come and sit with an expert here at VM, such as Deanne and her other colleagues, who will be able to assist in helping you to determine what type of account and what type of savings that you can partake in. All right, right, Deanne?
Correct.
Correct. Now, we move from savings to retirement. A lot of persons, we may be young, you and I, but we're thinking of, retiring. Some of us want to retire early, and some of us are just generally thinking of what will happen when we get to that retirement age. Now, is that something that is valid to think about when you're doing that half-year checkup?
A retirement plan is definitely important, because no matter where you are in life, once you're working, it's always good to have a retirement plan. And at VM, we have a VM pension plan for everyone, and our team is here to give you that plan that suits you. So for example, if you know that you would normally your company would normally take a pension from your salary, or if your company doesn't take a pension from your salary, you can always come to us and we'll give you a pension plan. If it is that your company is already taking pension from your salary, you can always do a voluntary pension and do the maximum if you can afford to. Because trust me, it is always good, because you know that once you have a pension plan, you know that it's tax-free, right? So it's always good to have a pension plan, and that's a good tip to know.
All right. So I think it's valid to, one of my takeaways here is that it's valid to do, that half-year checkup to ensure that, one, you're keeping up to date with your goals. And if you're not keeping up to date, it's good to find what the gaps are. And it's always good to plug those gaps as you go along, right?
Correct.
Is there anything else that you just generally want to leave with our viewers today?
My closing advice is always do a quarterly checkup, that is, evaluate your budget constantly every quarter, and always ensure that you don't spend above your what you earn. If you're going to be spending, spend it necessarily, and these things are like on your needs. Your wants, always ensure that your wants don't supersede your needs. And for that credit card, as I said, ensure that you always pay off that balance. Never you pay your minimum balance, because a fees always come in place, and you're just going to always be spending more instead of spending less.
So the message is to be vigilant at all times, whether
Correct.
it's half year, whether it's quarterly. Some people might do it monthly, some people might do it at other intervals. But the message is always be vigilant and keep on top of your investments, your spendings, your savings, and all your financial obligations. Now, Deanne, I want to thank you so much for having spent these few minutes with us. The advice was very beneficial, and I hope that our viewers will learn something that they didn't learn before from this. So thank you so much. We'd also like to thank our viewers for being with us on this edition of Financial Fridays. Remember, for expert guidance, you can always call us 754 VMBS, that is 754-8627, or send an email to manager@myvmgroup.com. That's manager@myvmgroup.com. This has been another episode of Financial Fridays. Thank you so much for having joined us.